question for you guys. And one thing I was confused about was the episode where you guys are kind of like visualizing the future and having $1 billion. And I was like, that doesn't make any sense because you're talking about building it over 3 generations. So you're not going to have a Lambo. You're not going to have apartments all over the world. Potentially your grandchildren will, or your great-grandchildren will. And, is that actually desirable? Because, if they did nothing to earn that, what is their life going to be like?
Yeah. And I think just the fact that this compounding plan will not lead to the realization within our lifetimes of the goal explains why we and most other people don't even start investing at all. And in a way, this podcast, through all of our wonderful interviewees like you, is a way to explore whether it is even possible to come up with a system to trick us, to falsely activate the instincts that are favorable in achieving that goal.
Right.
I was just going to add to that and say the idea actually came from a book by a guy called William Bonner. And it's called...
Yeah, I heard the podcast and I looked up the book and all of that. So yeah, no, I'm familiar with the concept. I read an outline about it that I think it was a blogger, I forgot his name, he wrote about it and took away some key points. So I thought it was great. Like I actually wanted to talk to you about this because I think the idea is awesome. It's just that I was just trying to get my head around, it seemed like there was 2 different ideas at play based on you guys talking about, well, what would it be like to be a billionaire? It's like, well, you're not going to be a billionaire. It's not your money. It's going to be this future generation's money. So you're going to live like a pauper to make them billionaires.
It's another struggle between 2 extremes. It's interesting how your interviewers brought up this. There's the balance between risk and optimism. There's the balance between the slog of the first generation and the untold riches and fortune of the 3rd generation.
Right.
And where do you get to activity in this fight between these 2 extremes? When you were mentioning optimism, you reminded me also of Cathie Wood, and this is to take things back to the start, because one thing I actually also appreciate about Cathie Wood is her optimism. Mm-hmm. She has amongst all of the people saying no and taking pot shots at her on Twitter, she is someone, and her fund is a fund that has participated in the massive upswing due to all of these tech stocks. And you can't take that away from her. And she's ultimately been guided by her optimism as opposed to the fear of loss that a lot of other people are tempted into.
100% agree with that. So yeah, I actually wanted to talk to you guys about this idea of this multi-generational wealth thing, because I find it a great idea. I think it's really fascinating. And I've thought a lot about this actually myself in terms of, especially what you brought up, Ben, was the idea of that culture, right? I think that's really key in terms of the adherence to it. It's not just for you, but for your future progeny and them to carry forward this thing that you've started. So yeah, I was curious to know if you guys have explored that further in terms of discussing it or looked at ways to implement that. So yeah.
I think it's an interesting topic because it inverts a lot of, or challenges a lot of ways people think about making money in terms of the purpose of making money. Usually it's self-centered. You want the riches, especially for younger people, to be able to buy nice cars and nice houses and have international holidays. That's one sort of common theme to obtaining money. And also the other key aspect to that way of thinking is to achieve it quite quickly. This inverts it or changes that thinking in the sense that it says, well, maybe making money doesn't necessarily always have to be self-centered, and what benefits it can draw to just yourself. And it doesn't necessarily have to be making a lot of money for the 3rd generation. It could be making a lot of money for some other purpose, environmental, such as, or other climate change, for example, like you've touched on. But we wanted to show a simple methodology, $35,000 that anyone could do, almost anyone, living in.
Yeah, I'm not sure most people can afford $35,000 a year, but fair enough.
Well, okay. Well, you have to adjust the 2 or 3 factors that we've got in the model. Then you could either, if it's not 35,000, it's the length of time, or it's the amount of return that you're going to get each year compounded, or maybe even the number of children that you have that can contribute to it.
Right. Obviously your audience is different. These are people who are like, investors and stuff like that. But the common person, I don't think has 35K sitting around that they need to put to work each year.
And you have to then ask the question, why not?
Right. Well, because we have a system that's built where most people are making very, very minimal level of wages for the level of work that they're doing, right? Like I think that there's
didn't you
great
say the average
unwashed
wage
middle.
in Canada is around about $80,000?
No. I'm saying that people like around my sort of like neighborhood would be making that probably more, right? But the median wage for a household, I think, might be 80,000. So it's like 40,000 for the husband, 40,000 for the wife, right? Yeah. And they're having to pay for daycare. That's like $2,000 a month, and then you got your rent, and then you got I'm just saying that most people do not have 35,000 kicking around. I'm not saying that there's no one. I'm just saying that the average person, median person, probably doesn't have that available to invest.
Is there a way for the average household to get to that point? Like, one thing we haven't explored is the FIRE movement and frugality. But I think you make a great point, Jug. It is pretty optimistic, 35 grand a year. But I think maybe what Ben is prompting us to do is to consider whether we're being overwhelmed by essentially our commercial and our capitalist systems use of temptations to make us spend money on things we really don't need. I wonder if there was a brutal rationalization of people's purchasing habits. Maybe you could get closer to 35 grand a year than the average person could get closer to that than they think they could.
I think a more realistic thing, and maybe more people would find relatable, is like maybe you could find $500 a month, to put away. 35,000 is a big number for most people in the world, I would say. Like, there's very vanishing small percentage of humans on this planet that could put away 35, whether we're talking Aussie dollars, Canadian dollars, or US dollars. I think that would be a lot. And so
the average Australian salary, sorry to cut in, as far as I'm aware, the average Australian salary, at least, and this is in Australian dollars, obviously the terribly cheap currency, is $85,000 a year, which after taxes is basically, call it $65,000 a year. So right. Yeah, 35 grand is half or more than half the average right. take home.
And that's more before any living expenses, right? Like, so yeah. I'm just looking at basically in Canada, the median household income, family income, is $88,000, right?
Yeah, so it's about the same as Australia.
Right. And so I'm just saying, like, I'm not a rich dude, right? Like, I might have worked at a hedge fund and this and that, but I'm not, I'm not rolling in it. And like, I don't know. I'm just saying, like, 35,000 to a lot of people, it's just sort of like, what are these guys talking about? Whereas if you're talking about something that's a little bit more, I think, attainable for the average person, it might be a little bit more relatable for them. You might not get to your $1 billion goal, but it might be more realistic in terms of like, okay, if I compound that out, what does that look like?
That was exactly why we chose 35. It was
I know.
Get to $1 billion. Yeah. What do we have to
do? But there's, I mean, like,
but you do want to have big audacious goals. You do want to have big audacious goals, and I think $1 billion for most people is a big audacious goal. And also, it's not going to come without sacrifice. Whether you can get to $35,000 or not, if it's $500 a month, does require some sacrifice. I do get your point in that there does need to be some relatability. If it is too large, like if we had said $200,000, then it just becomes so much more removed. Right. They just switch off straight away. I think the concept is more value than the actual end goal of a business.
Sure. No, I agree. And what I'm interested in is in terms of like, so what I've tried to think about is that culture aspect in terms of thinking about how does one sort of go across generations and instill your values and viewpoints in terms of like, here's something that I've started, right? Like, I started putting away this money, but it wasn't for me. It was for my children. And they're purpose is not to go spend this money. It's to do the same thing that I did, add to the pile, right? And I think that's the interesting aspect to this it's to add to this pile that's existed before me and leave it bigger than what I found. And eventually along the way, I think of it almost like an endowment model where you have something where, and you also have to branch across, not just because family becomes fragmented, right? Like who's family, who isn't family, and how do you adjudicate as to who's part of this and who isn't? I think that becomes a very interesting question. And then again, instill this value across all these people that may or may not have any relation to you, and get them to buy into this idea. And it's almost like an endowment model or a tontine, where it's like, you're sort of investing into this thing that could potentially pay out to you. I don't know if you guys have heard of this, but like there's this thing that they're developing, or I've seen around, where if you're a young professional that's like going and becoming an entrepreneur, to hedge your risk in terms of like going homeless and losing everything, they pay a little bit of money each month into this sort of like fund. And the fund is there to basically bail out entrepreneurs that are like, failing out of that group, whatever the group is. And the people that are super, super successful are like the right tail of the distribution. And they're able to like basically put a bunch of money into this thing. As you go along, you put more and more money in as a percentage of your income. But the idea is to kind of allow people that otherwise wouldn't be able to do entrepreneurial things to take those risks, because there's no other safety net for them. And I love that idea. I like, to me, because you guys mentioned the idea of liberation, right? And I love that concept. In fact, one of the ways that I kind of describe building the kind of portfolio that I want to build, it's a freedom machine, right? The idea is that you put money into this thing, and eventually it gets to a scale where you never have to work again. It's fuck you money is what I call it, right? Like it's just your ability to go do whatever you want and never be beholden to anyone else, right? And that's incredible, and it's like really freeing. And I think that's a seductive idea to most human beings, and I think that's maybe a way that you can build that culture. But it's also, you have to have this sort of flip side of the coin of responsibility too, right? Like, so that's a very seductive idea, but it also requires you to then do the hard work in terms of adding to the pile. And that's the thing I think most people don't want to do, right? And so,
well, I think you raise a really good point there, is that even though you're making the contributions and you may not see the $1 billion at the end yourself, that you do get benefits out of it. And the two benefits, most obvious ones, are you're achieving something greater than yourself, but there is also that risk mitigation for the individual. So if
right.
15 or 20 years into this and you suddenly lose your job and everything goes pear-shaped, ideally you've built up a portfolio behind you that means things are going to be okay for the next couple of years.
Right. And then the danger is always like, I think you also have to have this sort of committee approach in terms of how you're making investment decisions, because if you leave it in the hands of just one or two individuals, they could go YOLO bet the whole thing away, and it would be disastrous. Or Bitcoin, right? Like,
now, as a result of this interview, that we've enticed Ben back into leverage.
I hope not. But like, I don't know if in Australia they have a lot of these sort of like family dynasties that have like come and gone, but here in Canada, we've got more than a few stories.
Rupert Murdoch.
Okay, is Rupert Murdoch one? Okay, but like, have you?
That's the only one.
Australia's only 200 years old in terms of Western settlements, so there hasn't.
Well, so we're not old either. Like, Canada hasn't been around that long, like about 200 years as well. But we have these families like Seagrams. This was like this big liquor company. And what happened is, like, this is back during the tech bubble. The empire went to this son, and he basically bet the whole company on like being an entertainment company, and so it became Vivendi Universal and all this other stuff, and he pissed away the entire fortune basically. Like, this was like multi-billion-dollar empire that had been built on a very stable business, which is alcohol, right? Like, how do you fuck that up. But and so part of the reason why it became this very successful family dynasty is that we didn't have prohibition in the 30s in Canada. The US did. And so they made a killing selling bootleg alcohol. Well, not bootleg here. It was distilled. It was normal, and they were smuggling it across the Great Lakes into the U.S. and making a huge fortune. And from there, their family took off, and all it took was one generation. And it's called shirt sleeves to shirt sleeves. It's this idea that within 3 generations you can completely piss away whatever fortune you've given. And I've dealt with people who have a lot of money on the private wealth side and all of that, and that's a big concern, right? Like their kids are fucking useless because they haven't been involved in building anything, right? And these other
They
people
haven't been exposed to the sacrifice of the grind.
right.
I think that's
So
what you were trying to get at when you initially posed this question to us. I
right.
guess you were wondering if we understood really the meaning of what a child of enormous wealth looks like. Is that what you're
Right.
saying? Like they're basically, in a sense, are kind of useless, or
Well, not useless, but you've taken away something that I think everyone faces, which is now I have to go do something with my life. And if you've got literally a family fortune of $1 billion sitting, you can do nothing with your entire existence if you choose to,
you
right?
can afford to be a useless so-and-so.
Right.
But there are
Sorry, go ahead.
there are examples of where dynasties have occurred and stayed a long time. Rothschilds is one of the examples that's given in the Family Fortunes book, and they another very famous example would be the Queen of England and her dynasty.
How's that going? That family is falling apart literally right now. Like
Because of you Canadians.
She's still one of the wealthiest women in the world.
Yeah. But she's also lived for almost 100 years. Like, I'm not talking about that. I'm talking about like.
Where are they going to be in 50 years though? They're more like.
I would say to you that they're gone. They're parasites. They will be wiped away in the course of human history. They are an anachronism currently, and one that is tolerated because they're not sucking up too many resources. But give it 50 years. Are you kidding me? How
They're
the hell
vestigial. They're, to use an Elon Musk term, which I love, they're a vestigial part of our culture.
Yeah, no, they're done. Anything that's like based on blood, in my over with. Like I deeply believe this. Like, so that's what I'm saying is that this idea of family, I think you have to be more nebulous. Like literally, I was thinking like if I was talking about my sort of family, quote unquote, and creating the kind of thing that you're talking about in terms of creating massive wealth that is transferred over to these future generations. To me, it might be something as simple as I've written this kind of thing that explains if you agree with it and you share my last name, it doesn't matter if we have it, then you're family and that's it. You're part of the tribe. And I think you kind of have to think of it that way in terms of like, I don't know if you guys have ever read The Selfish Gene, but that's actually where the term meme comes from, right? It's at the very end of that book, Richard Dawkins talks about. So he talks the whole book about genes and how we're basically products of our genes. And then he's like, oh, last chapter, by the way, we also have this thing called memes, which is the handing down of ideas through humanity. And that can override all of this other stuff that I just talked about. And so a meme is the idea of like an idea passed through generation after generation after generation, right? And the best memes so far, the most durable ones, I would say, have been religion, right? That's been the thing that's been probably the most strongest meme that's existed in history, recorded human history. And I think you have to take some cues from that in terms of how does religion approach that? How do you build?
I love this idea. We should start a meme for our compounding machine.
Yeah, I just think that you have to think about this because it's sometimes it's a disservice to leave a huge amount of money to children that are not prepared for how to deal with that.
But this is we're getting bifurcated again because as parents, simultaneously, we want to give our children, we want to put them on a rocket ship.
Sure.
But also, we don't want them to be useless fools.
Right, exactly.
It's interesting how this interview is leading to all of these conflicts. And it's how do you deal with this conflict?
But you're a recent father, right, Will?
Yeah, my daughter was born in November.
Oh, congratulations. So,
Thanks,
you know,
man. Congrats to you too.
thank you. But you know, it's one of these things where, especially as you start to see her development, right? And it's been this case for us is that like, you know, we love our son, he's awesome, but you know, there's this aspect, and I think partly because we've all been quarantined together, he's so used to having us here all the time with him that I worry about the effect on him in terms of him being independent and seeking to try and fail. That's one of the biggest things that I find is a pet peeve of mine right now with him, is that he just says, I'm no good at this. And so he gives up. And I'm like, I keep drilling this into him is that, so the way you get good at something is you have to try and fail and practice and keep doing and keep doing and keep doing. And that's how you get better.
You need to go through a crucible. The
Right.
crucible is good for you so long as you survive.
Right, exactly. See, that's what I'm saying. So this idea that like I get it. Like obviously we want to make our children's lives as smooth as possible, but there is a point at which you make it so smooth that they are incapable of having any grit, of being able to take any kind of setback and be able to bounce back from it. And I
Okay, so
think
I've got an idea. How about then an intelligent way to navigate these waters is to have initiation rites, to have deliberate crucibles that you put your children through. Maybe, you know, a stereotypical one is to send them off to the military. They all have to do military service, or, you know, whatever the equivalent is if you're
Maybe they have to hunt their own meat.
I wasn't going in that direction. I think maybe the idea I was thinking of is like if you're kind of running it like a fund, like an endowment fund, that would be like you would never give all of it over all in one chunk to any one person, but instead the idea would be, you know, it's almost like an incubator approach, like a startup incubator, right? So show me an idea and I'll fund a little bit of it and you show me that you can scale it, right? And if you can't, then that's fine. You know, you fail, move on to the next idea, right? And we'll give you a little stake to be able to go try again. So I think something along those models where it's like, go find something you're passionate about and go pursue it and go do it as well as you possibly can. And if you fail, that's okay. At the end of the day, you're not going to end up starving, right? So you have enough of a sort of safety net that you can go take risk, but not take such stupid risk that you would be betting the whole fund on anything, right? And I think that type of concept can be helpful in terms of like looking at how venture capitalists think about this type of thing. Kleiner Perkins Caulfield Byers is like one of the longest running, most successful venture capital firms out of Silicon Valley. And they have a partnership model and it's existed for a long time. And those original partners left long ago and it's continuing, right? And they're still funding these new ideas. And how do you do that, right? Like, so how do you run a family fund like a VC or a private equity or an endowment fund, that type of thing? So
Ben, this is the next step for us. We need to model ourselves after Kleiner Perkins.
or Y Combinator or whatever, you know, like they do demo days and that's what they're kind of famous for, right? And so the idea of fostering that sort of like try something, fail at it. Failure is not failure. Failure is learning, right? And brush yourself off and try again, right? And that's what you have to do. You really have to go eat shit for a while before you figure things out. And you know, I think part of the problem is that as humans, that's the hard part of life, and we want to avoid that because we want to avoid things that make us feel bad.
But what you're saying is that what the system that Ben and I have devised, or really that Ben's responsible for, I'm going to pin this on you, Ben, is that we will fail as parents because we won't expose our children to the shit eating, the necessary shit eating phase to make, because if you don't eat shit, you won't develop cunning. And if you're not cunning, you'll be vulnerable.
Well, I wouldn't even call it cunning. To me, grit, right? Like that's a big area in psychology these days.
Same sort of domain.
Right. So I think, you know, building grit is a really, really important character trait that we all need to do more of in terms of
what I'm talking about is naivety as well. Like essentially, it's to go back to religion and Eastern thought. That's Buddha, right? Didn't Buddha come from a rich family and he went out into the world?
I got news for you. Almost every philosopher comes from a rich family. So yeah, you're right.
But the thing is that he didn't know what the world was. He
Right,
lived in a
right.
walled garden because his parents were, as parents, we're faced with two things. We want to protect our children for God's sake. We don't want them to die. But you can't only be successful at that. You also need to be successful in producing the capacity for them to protect.
Right, right, exactly. And actually, I think that, like, this idea of protection, it's against the really catastrophic tail hedge or the tail risk, right? Like, so dying, yes, my job is to make sure my son doesn't stick his finger into the electric socket and kill himself, right? But at the same time, him trying to build his Legos and failing at that is a good thing. And when he gets frustrated and wants to throw things because he's a toddler and he doesn't have the emotional capacity to deal with failure, that's a learning experience for him. And he's going to have to do that. And like, the thing I get frustrated with sometimes is just like, I try to keep saying to him that, like, beyond just trying, it's like, you're super lucky. Your existence is so blessed in terms of where you live and your reality. You have the luxury of saying, I don't like this cartoon, I want to watch this cartoon on demand. And you have the luxury of saying, this food is yucky and I don't want to eat this. And that really, I just kind of enrages me, because I'm like, there are literally people that they don't have the luxury of any food, and you're sitting here saying that this meal that I prepared for you is yucky when you haven't even tasted it. It's just, you don't understand. And I lecture him, and there's some comprehension in his head, because he can tell daddy is frustrated right now, and he's saying a bunch of words to me, and like, some of it starts to register, because I'm just like, I won't tolerate this. Like, you can go to bed hungry, and eventually, yeah, I'm going to feed you or whatever, but there has to be a cost to making decisions. And that's another thing that I'm always trying to ingrain in them, is that good behaviors have good consequences, bad behaviors have bad consequences, and there's a price to be paid. You can make a choice. I allow him to make choices, but when that choice is a bad choice, here's what happens.
What you've brought up then is the paradox that the incredible display of human grit of surviving Ben's compounding plan could produce offspring with the least amount of grit one has ever seen.
Correct.
You're trying to get Ben and I to incorporate in our plan. The child doesn't merely benefit from our grit, but from this somehow develops sufficient grit to carry on the compounding.
Yeah, and I think more
Just
importantly,
spending it
it's
all.
what's the larger goal, right? And like you
Yeah.
guys said, it's like, in your heads you're imagining luxury apartments and condos and Lambos and all of that stuff, and to me, I'm just like, that makes no sense, because if you
That was to following Tom's point. Tom raised is that the dopamine reward system is a way to juice us up.
yeah.
And a part of that, to leverage the dopamine reward system in this incredibly long-term context, you need to use episodic future thinking to trick your brain into being motivated in the face of what is going to be a dopamine drought.
No, I understood all of that. What I'm getting at, though, is that if that is the focus, you will never achieve that in terms of saving the money that you're talking about saving. But more importantly, if that's the sort of end goal for your children, they'll piss it away. And
Sure.
if their children's children are the ones that, like, are thinking that way, they'll piss it away.
Yeah, well, yeah,
It's not a big enough thing, in my opinion. So
yeah.
driving a Lambo, to me, I could care less. If I don't own a
I
car,
hear
I
they're
never have.
terrible. I hear they're the worst cars to drive.
They are, but from what I understand, I've never driven one, but I've never owned a car in my entire life. I don't care if I ever do. I really don't. I live in a city, I ride a subway, I have a bike and all of this other stuff, and I can get a car on demand with, like, the services that are available now. So all of that, I don't care about at all. And I learned that from my parents. They're immigrants that came here with nothing, and my father now has a 7-figure portfolio, right? So that was just through them being frugal, investing, working hard. That's their thing. And that's what I learned. And we could care less about living in mansions or whatever. The point is that they have money that they'll be able to hand down to successor generation. And to me, I'm like, okay, how can I compound this? I'm thinking the exact same thing as you guys are, into this huge amount of money that I can hand to my son. But how am I going to do that where he understands how to handle all of that? right? And the jury's still out. He's 3 years old. I have no idea. He could be a junkie growing up. I have no idea, and that happened in my father's family. They had land, and some of them became addicted to opium, and they sold off they smoked. What I was trying to get at is that I think there has to be a larger vision for what that money is really for. And it's not for consumption. It should be for true investment, right? If it's for investing in human capital, right, in terms of the people that are involved, great. If it's in terms of investing in their ideas and their businesses, great. If it's investing in sort of the larger communities that these people exist within, in terms of like, donations and capacity building and all of that, fantastic. Those are things that inspire human beings. I honestly don't think deep down inside, Lambos are truly inspirational things. They're aspirational, but not inspirational.
Yeah.
And so I think that those are really distinct things that you have to think about. I think it's laudable, the goal that you guys have, and I like the idea and all of that. I just think you need to think a little bit about the structure of it, like, in terms of.
I have one. So one of my uncles is a radio astronomer. His crowning achievement in his career was to start the Square Kilometer array, which is a telescope that's distributed across thousands of receivers across a hemisphere, across multiple continents. So
Right.
what this thing is going to do in the first 20 minutes of operation is collect more data from the cosmos than has ever been collected in the entirety of human astronomical observing history.
That's amazing.
Yeah, it is. It's incredible. It's great, actually, that his intellect was trained on that as a target than some of the other targets that intellects are trained upon. But
Right.
what I was thinking, so this is a member of my family, and this is what he's chosen to explore. And in terms of a direction for the rest of the family that he's highlighted is going to another planet. Mm-hmm. This is, again, to mention Elon Musk, what he's chosen to do with his windfall from PayPal. I think it's what we should be doing, joining the race to Mars, basically.
I think you can set up the structure, as you say, Jagdeep, that it's for investment, investment both financial, but also in the individual and resources of the family. But there should also be some sort of structure around that and obligation on those investments. You could almost think of it as a bank where any sort of contribution from that fund into someone's education or entrepreneurial needs to be repaid in some form by the people that receive them. So that way it continues to be perpetuating, and also then you need to layer it both in legal structures. Maybe you set it up as a trust. I don't know a lot about it. And then also the other nice thing that I like that you mentioned is some sort of committee decisions by people in the family before, it can't just be falling into one person.
Yeah, for sure. Like, I think it's a huge responsibility to manage like a whole bunch of money if you have no idea how to do it, right? And so it almost becomes like part of the culture would be teaching that, right? Like, I view that as my thing that I will be able to hand down to my son, hopefully. Like, even if he tells me he hates finance and investing, that's fine. It'll hurt my feelings a little bit, but at the very least, I hope I can teach him enough that it's sort of like, here's something you can do very simply that you can execute and be okay in life, right? In terms of, yeah, exactly. And so like, I think that's part of the whole thing is about handing down this instruction manual for life.
We are nothing to our genes. To take something from Dawkins's book, we are short-lived vehicles for long-lived genes. We are not the story. We're just a blip.
Right, exactly.
The real story is these genes.
For sure, yeah. And I would say even more so, and like I said, he kind of just undoes all of that work by saying, oh, by the way, memes might be the most important thing because they're passed on a much grander scale, right? Like an idea like, Islam or whatever, it took over the world, right? And same with Christianity. It's insane when you think about it. And to me, those religions are literally insane, but nonetheless, like, people believe this stuff and adhere their entire lives to it. And that's staggering when you think about it, like that, we live in a world where like that has such a dominant influence. And there's people literally, like you said, trying to go to Mars right now. And we have rovers on Mars. So there's this crazy dichotomy in terms of where we are right now as a species. Like, there's some people
funny how there's these dichotomies memes versus genes. This is another, there's all these battles that this interview has brought up.
But if you think about it, the religion, say only 2,000 years they've been in existence, essentially. It's not how long have humans been on the planet? You know, how long have we thought of ourselves as humans? It's
400,000 years.
400,000. So
I'm not so sure about that. I think modern Homo sapiens have been around for about 100 to 200,000.
call it 100,000. So 2,000 years we've had Christianity. So 2% of the entire existence. So you could use that as an example to show that memes maybe don't last as long as the
Right. Well, I'm just saying, like, there's a fair bit of durability within, like, because human recorded history is, like you said, very short. And here's another thing that I think is important to also remember as investors is, like, markets have been around for, like, the data you can go back on with, like, equities and bonds is basically like 2 to 3 centuries tops, right?
And accounting has been around 4,000 years.
Is it 4,000? Really?
Yeah.
Like, are you talking about double ledger or just basic accounting?
I'm not sure, but that was something that Tom made a point about when he was doing the research for his interview.
Maybe it just,
I think
it's been around for 4,000.
I think the double ledger was in Italy, with, like, the Renaissance.
That he mentioned. Okay.
Yeah. It was the Medicis or whatever that came up with it, and that's why they became very successful bankers. But you know, when we're looking at stock market history, it's like basically you have a couple centuries of good data, right? And within that, you know, one thing I didn't mention in our sort of main interview there is that the U.S. is an outlier, and I think it's something that is often kind of ignored or overlooked. As an equity market, it is an outlier. It's by far the best performing developed market in the world, okay, over the last century. And it's also the one that has the most data, right? And so that's the one that everyone looks at. But there are plenty of stock markets that did not do well, like, you know, Germany, for example. You know, they had the Wehrmacht Republic and they had, you know, the Third Reich. And so, you know, that fucked up a lot of people's money. And you had the Bolshevik Revolution, where the Moscow Exchange shut down in 1917 and didn't reopen until the 1990s, right? You have Japan, that's like, you know, the sort of big cautionary tale for developed markets today, which is like, you know, 30 years of sideways markets. So, and you look at the UK, I actually like checked this chart myself, in terms of like major developed markets. I can send it to you. Where did I save it? Just one second. So basically, you know, if you look at and again, like if we look at international markets, like the French market, the CAC 40, doesn't start until like 1989. Can you believe that? And so, you know,
I mean,
like,
they had a stock market.
No, they had a stock market. I'm saying the CAC index, this 40 index, wasn't started until like 1989, right? And when we're doing these analyses on financial time series and all of that, it's based on these indexes, right?
Yeah.
So this is what I'm getting at, is that, like, you know, and you look at the CAGR, the compounded annual growth rate, since those periods of time, like since 1989, France has done 4% a year. You know, the UK has done 4%. The S&P 500 is 8.5. Nikkei is like negative 14 basis points per year. Canada is like 5.5%. Germany is the next best performing major market at 7.5%. Australia did 4.34%. Switzerland does 6.3%, and the Netherlands did 5.4%. So, you know, like I said before, like all of this can work as long as you keep putting money to work in these indexes. But the variability in terms of, like, if I go from the S&P 500 to Japan, I've gone from 8.5% to negative 14 basis points. If I go from, you know, S&P 500 to France, you know, we're talking about half the returns. So when a French investor is looking at, you know, how do equity markets perform, their reality is very, very different than what happens with the US. But that's, I suspect that to a large extent, when they're looking at, you know, what does the market do, quote unquote, the market, they're probably getting a lot of data that looks at the US, right? Because I know that's what it's like here in Canada. I mean, obviously we're right beside the US, but it's that's the dominant narrative that people are going to show you.
The French market has not gotten back above the highs of 2000. It's only done 5x basically since inception.
Right. So that's what I mean is just that, like, when we're talking about a market, we have to be specific about what market we're talking about. And invariably it tends to be, we're talking about the Warren Buffetts of the world, and we're talking about the S&P 500s of the world, but those are outliers. Those do not represent the vast majority of investor returns around the world. And I think that that's an important point that people should keep in mind when they're investing locally, is that, you're not necessarily investing in the US stock market. You're investing in probably your own market or your own geographic region. And that might have a very different return profile than these other indexes that most people are touting.
Yeah, there's so many factors and so many things you've brought up in this interview, Jug. Ben and I have been joking that we want to become the Joe Rogan of finance podcasting. We've gone for 3.5 hours now, so we made it.
Okay. Yeah. Sorry, I didn't mean to keep you guys. If you guys have to
please
go.
don't apologize. This has been the best interview ever.
Okay. Thank you. I didn't want to disappoint you guys. I'm just like some rando off of Twitter that you saw.
No.
So, I wanted to make sure that I bring the heat for you guys.
So I've been counting surreptitiously whilst we've been going through, and you've raised 35 terms. Like, this podcast is great for me, especially. Ben's the one that knows what he's talking about because he's a chartered accountant. I'm just a geospatial analyst knuckle dragger. So what this does for me is it's terrifying for me, all of these interviews, because I'm a total noob. It gives me I have homework to do after every interview because there's so many things that I learn. But you've thrown off 35 terms that, like, everything from left tail to premium. You used a great word that the last time I heard that was during philosophy. You used the word qualia, which was great. Risk off, efficient frontier. For the 13 asset classes, I got gold, land, currencies, volatility, short, long equity, pair trades, crypto, trend following, hedge funds via ETFs, the S&P 500 convexity ETF, timescale diversification, and then stocks and bonds. I presume those are in there. And the last one you mentioned was World Tree. I don't think that's the 13th one really for you, but I put that in just to round it out.
Sure, yeah. I think there are impact investments that can act as real diversifiers. In fact, I would say that this is something you could put in your portfolio. It's basically like investing in timber, but with a social impact. And timber is actually been a pretty phenomenal investment, and it probably will continue to be even more so going forward. Because it is this like long compounding, highly, like, it has its own internal rate of return that has nothing to do with anything else because it's just about the growth of trees, right? And that's what makes it kind of wonderful. And the payoff when it happens can be very, very lucrative. In fact, there's a guy by the name of James Grant who runs, what is it called? The Interest Rate Observer or something like that. He's a big treasury nerd. He looks at interest rates and bond markets and stuff like that. And his recommendation, I think it was like one of his interviews a couple of years ago, he was like, I think the best investment somebody could make is in black walnut trees for the next like 30 years. Because they, you look at how timber is done as an asset class, look it up. It's actually an excellent investment. And you can get into really alternative investments. Like, I know the non-fungible token thing is taking off and all of that, but the collectible space in general, rare wines, rare whiskeys, and that type of thing are legitimate asset classes that you can invest in. And art is actually one of the best tax arbitrage or tax avoidance plays for rich people in the world. They literally never take delivery of the art. It just sits at a port in a holding place.
I've heard about this.
Yeah, and basically they're able to, like, it's another way for them to basically send money across borders tax-free. That's really what it comes down to. And so art, wine, liquors like fine whiskeys and stuff like that, those are legit asset classes, and I know most people would think like that's crazy, but it's true. And in fact, they do quite well. They're still correlated. Like, during the global financial crisis, those things went down because rich people lost a lot of money. But as sort of quote unquote alternative assets that are hard assets that benefit from this sort of inflationary concern that people have, not a bad place to be.
All right. That's so much to take in. If I don't know if you want people to contact you, but if people do want to get in contact with you, learn anything about you, how should they do that?
I think Twitter is probably best right now. Yeah, like I said, I'm kind of figuring out what my sort of professional next steps are going to be. Coronavirus has kind of fucked everything up right now. So right now, currently, I'm just a stay-at-home dad. That's my official title, slash student. I'm doing some courses right now as well. But going forward, my path will be to manage money professionally. And so I kind of have to figure out how I'm going to do that and what it's going to look like and whatnot. But for the time being, yeah, I'm happy to connect over Twitter. My DMs are open. So if somebody wanted to get in touch, and feel free.
Okay.
What's your Twitter handle?
It's at Jagmavi, Jagmavi.
Very good.
I don't know if I mentioned it to you guys, but my portfolio, like what it's compounded at over the last 9 years is 27.5%.
Damn. That's
So,
excellent.
so you can do that. Like that's doable, right? And I'm not saying that that's what the future return is going to be. That's during a period of time where the S&P did like 15% annualized return. That's not normal. The long-term return for the S&P is more like around 8%, right?
Yeah.
And so but even if you do half of that, let's say it's like 16, 17%, somewhere in that range, even 15%, that's, I think, what you guys have in your spreadsheet is 15%, right? And believe me, that's very, very doable. Even with like something where, like, we didn't get into risk parity, but you could do like a risk parity portfolio with gold, stocks, and bonds. And if you lever that up 2 times, that easily hits like 15% a year, easily.
Fun.
And your risk profile basically looks the same as if you had held like an all equity portfolio, but it does way better than a purely equity portfolio. And that's the magic of having diversified portfolios, right? And if you add leverage to that, like, that's where the magic happens. So build something super stable and then add leverage to it. And then you make a lot more money. I'll leave you with this. I had a quote that I was going to give you. Ray Dalio: pain plus reflection equals progress.
Thanks, Jagdeep.
You're welcome.